and that's that we can make money on the short side and on the long side of stocks. And what we're going to do in this presentation is I'm going to walk you through some setups and some stocks that we've traded within the last month where we made money on both the long side and on the short side. We're going to take a look at a Chinese education stock, symbol EDU, Facebook, which I'm sure every single person listening to this webinar has an interest in. We're going to take a look at potentially BVUS. We're going to take a look at a financial firm that perhaps you guys have actually heard about, Knight Capital, which made a little bit of an error, which caused a huge stir in the U.S. equities markets, and take a look at how we traded that on the short side and on the long side. Just to take a step back, when I first started trading, which was back in the 90s, we actually weren't allowed to short. All we were allowed to do was trade on the long side, and we did that for probably the first 5 years of my trading career. It was only longs. It was mainly actually NASDAQ technology stocks. And then over the years, we had to develop our game. But, you know, if I was working at a professional trading firm and we weren't allowed to short, and our firm is doing really well, then it stands to reason that a lot of investors out there, a lot of people perhaps who want to learn how to trade, don't fully understand how to trade both sides. And I think that we grow up in this age of financial media where there's an overvaluing of bias. There's an overvaluing of, let me pick the direction of a stock. Let me predict whether or not Facebook is going to go higher or lower. And one of the things we're going to talk about today is that's not really trading. Traders don't really make predictions. They look for good risk-reward setups, and they pull the trigger. And I know that that must be a little bit alarming to some people actually listening to this broadcast. What do you mean trading's not about predictions? That's what I signed on to this broadcast for. I want you to actually predict whether or not the SPYs are going to go higher or lower from this price. I want you to tell me if Apple's going to go higher or lower from this price. And again, that is not what a professional swing trader, a professional intraday trader, I think in the future even a professional investor needs and ought to do. You need to look for setups that offer a good risk-reward situation from your entry point and then make the trade. You cannot control the results. Okay? And very few people, if anyone, really can predict where the markets are going. And one of the things actually I want to do when we talk with the remisers during our luncheon is talk about how to reset the financial industry so that we're giving better information to investors and traders, so that we're not pretending that we can predict where stocks are going to go, so that we're not pretending that this is an easy game, so we're not pretending that everyone goes from handling $100 million to $5.5 billion by guessing that housing is going to go down, as we forget all the people that blew up. So what I want to do is I want to teach you setups that are responsible. I want to teach you setups that allow you to make consistently profitable trades. I want to teach you setups where you're not going to blow up your account. I want to teach you setups that you can make your own. Okay, and so we're gonna show you how we do it, and then most importantly, we're going to show you how you can actually make these trades your own and get better at them. What's up? Melissa, can you make me an organizer now?
You are an organizer.
Share my screen?
You are an organizer.
Okay, and am I sharing my screen?
No, you're not sharing your screen.
Okay. How do I go about sharing my screen then?
There should be a button that states "Show my screen."
Okay.
It's like a big gray button. while Mike is setting up and trying to share his screen, just want to let the audience know that we are very honored also that we will have an insight to the AM meeting where Steve Spencer, the other partner, will be going through the AM meeting and showing all the trade setups as well. Okay, we finally have screens, so I'll leave it to Mike again.
Okay, great. So let's get started. I'll give you 30 seconds to run through our disclaimer. Uh-oh. Okay, so let's talk about an exercise that's going to help you be able to find short setups and long setups. So one of the things that we do every day on our desk, every day, is before our guys actually leave the desk, they archive a setup, a trade, that makes the most sense to them. They give it a name. They write down the characteristics of the trade. And the reason why we want them to do that is we want them to understand the setups that work best for them. We want them to internalize their best setups. When they write down a specific setup that they loved during the intraday, they're making further connections with their brain, with their trading brain, that allows them to build trading skill. So if you just trade something during a particular day, you're making, that's one part of learning. But when you actually sit down and write it out, you're making a further connection. You're building further skill. But the biggest thing that I want our guys to do, and I'm sure everybody wants to do this, is it helps them to trade bigger. If you know the setups that work best for you, and you write them down, and you see them again going forward, it gives you more confidence to trade that setup with more size. And when our guys are archiving, and our young ladies are archiving a setup that makes the most sense to them, we ask them to find the spots in that trade where they could have been bigger. You see, too many people spend a ton of time on their weaknesses as traders. And the reality is that what you really want to do is spend most of your time building from your strengths. You want to find these setups that make sense to you, and you want to be very tough on yourself. Most people are tough on themselves when they're losing money or they've made a bad trade. Flip that around. You want to be very tough on yourself when you've made a winning trade. Did you trade it with enough size? Are you finding enough setups like this? You want to trade more of these best setups. This is how you improve your P&L. So my next book is called The Playbook, and that is the cover that we are displaying to you guys. Very few people have actually seen it. I think it looks pretty cool. And so my next book is The Playbook, an inside look at how to think like a professional trader. And the basis of the book is this playbook exercise, which we're going to teach to you guys, which will help you find shorts and longs. So when we make a trading decision, when we actually put a play into our playbook, it has to have certain indicators. It has to have certain sections. And so the sections for us are the big picture, intraday fundamentals, long-term technical analysis, intraday technical analysis, reading the tape, and intuition. And most people just make trades on technicals. We don't think that's enough. Most people make trades just on fundamentals. We don't think that's enough. And for those of you out there who might be scalpers, which probably should be a few, we don't think that's enough anymore. So what we want to do is we want to put all of these things together to make a better trading decision. So if you're out there and you're only trading off the technicals, this is going to be an exercise for you to make better trading decisions. So we put a title, a strategy description, the big picture, the fundamentals, long, short, reading the tape, trade management, a trade review of our trade, and then we leave it with a trade idea. These are all of the things that encompass each playbook entry. And I want to say this one more time. Nobody on our desk leaves the floor and goes home for the day without archiving their best setup from the day and sending it to me, and then sharing it with our desk.
Mike, I'm going to jump right in a little bit. Sorry to interrupt, but I think a lot of Singaporean audience do not understand the meaning of reading the tape. So just to explain to everyone, it's the same as reading market depth.
Okay, well,
some clients have also asked whether can US trades be done on Phillip CFD. The answer is yes. You can long and short US equities and indices via Phillip CFD.
Okay, thank you, Melissa. So our guys do not leave unless they're archiving this, and they're sharing it with our desk. So if you sit on our desk, you will archive a technical breakout play that you made in Apple, and you'll have that for yourself, and then you'll share it to all of our traders, and our traders then will be able to take a look at what you did. So let's say you traded Apple, breakout above 614, breakout above 625. You'll share that with the desk. You may see, hey, this person added at 618. I actually didn't add at 618. Let me see why. Let me see what he did. And maybe you'll start a dialogue with that trader. All right, so a very powerful learning exercise. All right, so the first thing is the title. We give each trade a name. Maybe it's a trade to hold trade. Maybe it's an opening drive, a breakout, a support resistance trade. We literally have hundreds of trades. We expose our desk to hundreds of trades, and then we ask them to narrow in on the ones that make the most sense to them. So recently, Shark made an unusual hold on the bid above inflection point trade. We're actually going to talk about that trade in Night Capital. We want a strategy description. How do you actually trade that unusual hold on the bid above inflection point? The idea is when you're actually taking a look at a trade, you want to ask yourself, if I make this trade 1,000 times, will it be successful? Not, was I successful on this trade? And this is a common mistake that new and developing traders make. Your job is not to make money. Let me say that again. Your job is not to make money. Your job is to make excellent risk-reward decisions. The difference between a professional trader and a new trader is a new trader is trying to make money. I'm not trying to make money. I don't care if I make a trade and I don't lose money. I don't care. That's not my job. My job is to do the right thing. My job is to make an excellent risk-reward decision. My job is to control my risk. My job when I see a trade that actually makes sense to me is to get into the position. I can't control the results. So for this trade, unusual hold on the bid, we want to see unusual buying on the bid. So on our level 2 that Melissa was talking about, there are ways that we can tell that somebody's actually buying a lot of stock at the same price. They're just buying at 30, 30, 30, 30, and they're not dropping the bid. When we actually do our training program, I'm going to actually talk a little bit more in depth about the specifics of reading the tape. For this presentation, it would take too long. So the bid's not going to drop. What you want to do in this case when you just see somebody buying and buying on the bid is step in front of that bid. If the bid drops, you just hit it. It's kind of a silly trade, but it really works. If the bid holds, then it's a trade to hold, meaning we're not selling this right away. We're going to hold this. We expect points out of this move. It's foreshadowing a huge buy order when we see this unusual buying on the bid. Why isn't the buyer dropping? In this day and age of algorithms where people buy a little bit at one price, drop, buy a little bit lower, drop, buy a little bit lower, why is some guy just buying at the same price? What was good about this particular trade, which we're going to talk about later in KCG, is that not only did we see unusual buying on the tape, but it was above an important technical level. So we're combining the tape and technicals for that play. All right, the big picture, what do we mean by that? What's the overall market doing? Is it an uptrend? Is it in a downtrend? That's important to us. If the market is strong, we're more likely to get long. If the market is weak, we're more likely to get short. If the market is strong and you're in a stock that you're shorting, it may not work just because the overall market is particularly weak. recently, as you can see on our markets, we've been in a little bit of an uptrend. So I've been noticing that my shorts haven't been working that well. And the other day I actually was saying to our summer training class, I was getting run over on a bunch of shorts, and I was noticing that I was just shorting too much. And they weren't really working. And the reason is, you can just look at the overall chart of the SPYs, is that particularly lately we've been so strong that some of the shorts probably just aren't working. All right, intraday fundamentals. Let me just take a step back. So before we actually trade a position, I want to know on our long-term charts, on our SPYs, on our big market indicator, where we are. If we're really close to market resistance, I'm going to be more likely to make a short. If we're really close to market support, I'm not really that interested in making shorts unless there's an unusual situation. Intraday fundamentals. All right, is the stock in play? Earnings, big news, sector in play? We do things differently here. We want to find stocks that have fresh news that has substantially surprised the street. So we're looking for buzzwords like improved margins, or a new product, or raised guidance, or gaining market share. I want to trade something that's surprising to the street, because when I see that, there's going to be new order flow that comes into that stock. When I see that, it's more likely for the stock to trend really cleanly. And this technique will work in the Singapore markets. It will work on the Joust. It will work for the FTSE. It will work in London. It will work throughout the markets, because it talks about psychology. People don't want to get left behind when there's really good or bad news. Markets are generally driven by fear and greed.
For these buzzwords, do you recommend reading it via newspaper, or just listening to the radio, or, for example, CNBC? Where can we get these buzzwords from? Would reading annual reports help as well?
Sure. So you certainly can look at the news. We actually built a tool called the SMB Scanner, and maybe Steve will talk about that when we pitch it over to him. And so we built the tool, and it actually scans Benzinga.com for these certain buzzwords, and we automatically generate the stocks that are most going to be in play. And I think actually, for those who actually come and take the training program with us, you'll have access to our SME scanner for a couple of weeks. The other thing that we use, we have the SMB AM meeting, which you'll see with Steve, so that's kind of a cheat sheet to find the stocks that are going to be in play. Another cheat sheet is just anything up or down 3%. But yeah, we're looking for news from a news service that has these buzzwords. All right, intraday fundamentals. You beat me to it, Melissa. So these are some of the tools that we actually use to make sure we're in the best stocks. The scanner, the AM meeting, the radar, S&P real time. We've built tools to help our traders find the best stocks to trade. So recently, a good example of this is Nike Capital. They made a huge error. Trading went open, and it cost them $440 million, and this was announced. And so we traded this on the short side for a couple of days. And then we actually caught the long, which we'll talk about. All right, long-term technical analysis. I want to know where's the support and where's the resistance, near-term and long-term, before I actually enter a trade. Okay, you can see in Nike Capital right here, below $10, the stock looks very weak on our long-term charts. Short-term technical analysis. How's the stock trading intraday? Essentially, I want to find stocks that are trending. I call this Bella's no stress trading community. You can hear me on the desk frequently saying to our guys, you guys make me nervous. They're trading in and out, trading in and out. I want to find stocks that are above or below important technical levels where the tape is showing me that this level is holding or not holding, and I want to ride that trend. So an example again in Nike Capital. All right, 3 was a huge short-term level in Nike Capital, and we got above that level, and we were holding above that really important short-term technical level, and so we were long. As long as Nike Capital was holding above 3, we were going to be long. Below 3, we would have been short. Reading the tape. So this is a skill I'm sure a lot of people don't have who are listening to this broadcast. Week 4 of the training program that we're going to present with Phillip is a nice section on how to read the tape. Our head trader put together a pretty nice 2-day reading the tape teaching program for those who actually want to learn how to read the tape. It's actually a very helpful tool. It helps you get bigger in certain plays. It helps you limit your risk in certain plays. It helps you understand when stocks ought to go up and down. It helps you with timing. So in that case, in Knight Capital, there was this unusual hold on the bid at 308. Buyer just wasn't dropping. Again, above that technical level. All right, trade management. We run through the trade. Where could you have been bigger? Got to step outside your comfort zone. Slowly, you got to get bigger in your best stocks. And then we want to review the trade. And we always leave it off with a trade idea. All right, so that's a little bit of a preview for what we call the playbook exercises. I want to kind of move through that faster because I want to get to some setups. But this is a path to being a pro trader. Okay? Amateur traders make a trade, and then that's the end of the process for them. Pro traders make a trade, and they review, and they review, and they review, and they review. They spend more time reviewing a trade than they do actually making the trade, just like a great athlete does. Kobe Bryant doesn't just show up on the court and play a basketball game. He lifts, he practices with his team, he watches his diet, he works on individual workouts. Same thing with a trader. And the job for you is to get better every day, to develop a larger playbook every day. And this is how you're actually going to improve your P&L. Your P&L is just a reflection of the playbook trades that you have mastered. So let's talk about one particular trade. This again was in Knight Capital. One of our traders, Meg, made this trade. We call it the pre-market dive. And so big picture, the SPYs had gapped lower during the pre-market. They were showing a little bit of weakness. So we want to know that. Is the market strong or weak? And you can see here the market was a little bit weak on this day, trading down from about 137.50 all the way down to almost 136. And this was actually mainly because of the Knight Capital move that shook the markets. So loss of confidence in the markets when this era came into our U.S. markets. I hope you guys read about this. Intraday fundamentals for Knight Capital. And so Meg got this from Seeking Alpha. A lot of times we use Benziga. They announced, Knight Capital announced a $440 million loss in one day. That's not good. They were down 50% in the pre-market. This was actually a day after they had lost 33%. So the first day, there was a little bit of a rumor that they'd made a mistake, and the next day it was confirmed how much money they lost. So a small company, that's a lot of money. And I think at this point, people were wondering if they were going to go out of business. So you can see it was $12 very recently. Then it got to about 10, and then one day it went from 10 to about 7, and then this is the second day we're coming in. And you can see 7 is a nice technical level that we learned from that first day on our charts. And you can actually look and see that 7 forms a really nice support level on our charts. Sold off all the way from 10, but has trouble really holding below 7. So we're going to use that as an important technical level because the day that it had really important news, it couldn't really trade below this price. And so you can see on the open at 8 o'clock that there was an opportunity for those who come in early to trade the stock below 7. All right, so gets below 7, we can initiate a short position. If you look at the tape, there was a momentum play, and there was some buying on the tape at 7 that Meg saw. And once it actually got below there, it started to show tremendous weakness on the tape. So now she's a little bit of a young trader, and so G-Man, I know, was very heavily trading the stock. G-Man is our head trader and will actually make a presentation during the training program with Phillip for about an hour on pullback trades, which is his favorite trade. And so below 7, our best traders were starting to get short. Now we had that technical level from the day before, and now we've got, you can see it can't trade below $7 for the first 20 minutes of the pre-market, and then it finally gets below there. So we're going to put together the tape, and we're going to put together the technicals, and we're going to put together the fact that this is terrible news. Below 7, we want to short it, and this is a trade to hold for us. And you can see that it moved very, very sharply to the downside. It went actually all the way down to $3, in 30 minutes, not even 30 minutes. And so when you put together all of these ideas, a lot of people are sitting there and they wonder, well, why don't my trades work? The reason why they don't work is they don't have a catalyst. There's no news behind it. There's no important technical level that the stock has gotten above or below. You just sort of think that Apple might go higher. Well, Apple needs a catalyst as well, whether it's the market, whether it's above an important technical level. And so that's what we're doing. We're being efficient with our capital. All right, so let's talk about, that was a short trade that we made in Knight Capital. And on the very next day, after we had an opportunity to crush Knight Capital below 7, after a day where we had an opportunity to crush Knight Capital below 10 intraday, we had an opportunity to crush Knight Capital with a really easy long. I'm actually almost embarrassed to talk about this long. It's actually going to be in my next book, The Playbook. I talk about this trade in detail. Shark and I do a trade review where I actually will present the transcript of Shark and I talking about this particular setup. Shark's probably one of our best new traders, and anyone with a nickname Shark should be. Iceman is our second best nickname, and he's probably one of our second best traders as well. And so he's an incredible person to follow, and I wrote a lot about him in my next book, and that he put his head down, didn't notice him for the first 6 months, started to notice he was getting better. When I first started the playbook exercise, one day I came in and I said, hey guys, let's actually start with this exercise. Let's start archiving our best setups and sharing them with each other, and perhaps this is going to be a way for us to improve performance. But I didn't make it mandatory. I just said, let's try it. And what I noticed after the first couple of months was that Shark had done more playbook trades than everyone combined on our entire desk. So I went back into the training room and I said, listen guys, Shark has done more playbook trades than the entire desk. It's now mandatory. All right, so now we do this every day, but he's a really hard worker. He works at his game, and that's why he's the best. There's no secret to why he's one of the best traders on our desk. So for him, we talked a little bit about the strategy. The big picture in this trade, SPYs were in an uptrend channel. You can see that every time we've found the bottom of the channel in the SPYs, we dipped down to 134 on the 26th, and we bounced. On the 6th, we found 138, and we pulled off. On the 21st, we found 136 at the top of the channel, and we pulled down to the bottom at 132 on the 27th, in which case we bounced. So we've just been in this tight channel. It's a strong U.S. equities market right now. They lost $440 million. It was reported in the Wall Street Journal. We all knew about this. They were down almost 61%. This was the third day of Knight Capital trading. So first 2 days down 30%, next day down another 30%, down almost 61%. And we're sitting there, and now the Wall Street Journal reports something new. And you can see what the Wall Street Journal reported was that they've secured a line of credit. So the day before, there was a thought process that Knight Capital was going out of business. And we sold off 60% in 2 days. And now we come in, and there's going to be a white knight. Knight's going to be able to secure a line of credit. This is new news. This is something the street did not expect. One of the things we do before we actually trade a stock is we look at its average volume, in this case 8 million for Knight Capital. We want to know its 52-week range, its short percentage, and the average true range of the stock to tell us how much a stock tends to move intraday. Stock moves 30 cents intraday. Unless it has incredibly interesting, substantially important news, it's not going to move that much. We might not want to trade it. On our long-term charts, remember, broke from 10 all the way down to almost $2. On our short-term charts, remember that 3 level was very important on this particular day. And so we're looking at the tape. Remember, 3 is an important level. It's holding above 3. We've got very positive news that they're not going to go out of business. And so we're sitting there, Shark and I are just sitting there on the desk. And I remember saying out loud, Shark, 308, guy's not dropping. 2 minutes later, Bella, guy's still buying 308. And we're sitting at each other, and this is like an embarrassing trade because it was so easy. And we're long, and our stop is literally 307 for some and below 3 for the rest. And 5 minutes later, I'm like, Shark, still buying 308. Guy's still buying. Hasn't dropped a penny. Buying and buying and buying at the same price. Tested, 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 tested. Not dropping. Above the important technical level of 3. So we got tremendous support on our long-term technicals and short-term on our short-term technicals because it's above 3. That's good in and of itself. And on the tape, not dropping below 1 price, 308. All right, so we both got pretty low in there. So for us, what we want to do in a position like this, the way the stock actually ended up trading was it wouldn't get above 320. There's a little bit of an issue with my slide here. I apologize. I'm going to have to fire one of the interns. So it wasn't getting above 320. Buying a 308, not getting above 320. And what Shark was thinking was he was going to buy a lot of 308 and kick some out in front of 320, and then when it held above 320 to buy whatever he sold at 320 back. That's a lot of insider baseball trading. Okay, the real trade for somebody who's just starting is buy the stock in front of 308 and let the stock do its thing and don't actually trade it until there's a reason to sell it. And let's actually skip. We'll talk about that at the end. We'll talk about reasons to sell. So we enter the position because it's an unusual hold on the bid, and then we actually have parameters for exactly how we get out of this trade. We call it a reason to sell. We're going to hold this position. Shark did kind of both. He's a very experienced trader. He traded in and out, and he held. That's something for a later day for you guys. All right, but really great setup. And Shark goes through his review and gives us a trade idea for the next day. All right, EDU. This is a Chinese education stock. This was a second day play. Again, this is a trade I'm going to teach at our training program. It's a really great trade, particularly for new traders. So what happens is that when a stock has fresh news, it will be crazy. Day one is crazy. Touches a lot of different prices, has a lot of big battles. Everyone tries to game the system. Is it going to go up or down? But what happens is that important levels are formed. There's a lot of competition day one. Lows for the day, highs for the day, levels where there's a ton of volume become very significant technical levels that we can use going forward, and we use them. And then day two, the day after, we can come in and we can use these levels to trade the stock, and they're not as competitive. The stock's not as competitive. It's not as crowded. In this case, for EDU, again, the SPYs were in that uptrending channel. Unfortunately, for EDU, there was an investigation by the SEC. This is a very bad piece of news. If you're long a stock and there's anything about the government, hit the bits. Hit the bits. Get out of the stock. Live to play another day. Just get out. This is probably one of the worst news, some of the worst news you can have. All right, so the stock up about 19%. Goldman Sachs suspends its rating. So if you look at our long-term technicals, you can see 22 as a level, and then as we move a little bit further down, you can start to see some of the second day levels really starting to manifest. So on our short-term charts, we're looking at 1550 and 15 again from that first day that it traded after the news came out. You go back. So it starts at 22, trades all the way down. Day one, 1550 and 15 are levels on our technical charts that we can use. We don't have to do all the heavy lifting on day one. And if you look at the tape, it starts to show lots of weakness. Gets below that 1550, gets below 1450. The sellers are stepping down, confirming that the stock is weak. No reason to get flat. And so you can see from the chart, we had our levels. And as you can see here, at about 10:15, it gets below 1450. That was one of our levels from day one. Gets below 1450, we can start to initiate a short, trade to hold. Steven does a really nice job of finding areas to really add to the position. You can see at 12 we can add to the position. You can see at 11:50 we can add to the position. You can see at 10 starts to actually show some strength, but below there we can add to the position there as well. So we're using the technical levels from day one. We're using the news, the fact that it's in play, to find a really good swing trade, a really good follow-through trade on day two. So as always, trade review. All right, now how do we trade it on the other side? So stock got crushed. Aaron Katz talks about we're in a tight range on the SPY. EDU had gapped down heavily for 3 days after the SEC investigation. You can see again from the chart, sold off from 22. Levels that he's looking at, a little bit above 10, a little bit above 12, a little bit above 13. 1150 acts as an inflection point for him. 12 is an inflection point as well. And this day it actually gapped up, which is a good sign, or maybe a little gap and go action. So we got above that 11, and remember that 1150 is that inflection point. And so he's watching that pretty carefully. 12 is forming a really nice base on the chart. So gets above 12, you can start to buy the stock. Gets above 1250, you can buy a little bit more. And you can see it starts to very clearly break the downtrend up around 1275. So a lot of people make the mistake that they think they have to try and catch these stocks at the bottom. If I want to actually make money in EDU on the long side, I got to buy it at 9, right? And you can see the stock's gone up 3 points, and there's still a really good setup 3 points higher after the stock had sold off from 22. Because we're really just looking for a pattern. We're looking for a setup where the risk reward is actually good for us. So I want to talk a little bit about, if you get into one of these really good trades, how do you get out of them? And then we're going to kick it over to Steve. So we find a really, really good setup, and then we actually need what we call a reason to sell. So we're in one of those night capital setups. We're in one of those EDU setups. How do we get out of the position? All right, here are the parameters how we get out. Hit your price target. Intraday uptrend broken. Breaking news in the stock. The market overall hits an important technical resistance level. Perhaps there's breaking news in the market or an unusual seller on the tape. Perhaps there's a clear buying pattern that dissipates. Maybe there's a time clock that goes off in your head. You think the stock's going to go up a certain way, it doesn't. Maybe it's too steep to the up move. Maybe the pullback's too much. Maybe the trading day ends. All right, so we have, before we actually enter one of these trades to hold, we have ways to actually get out of our positions. And we don't have enough time to do this right now, but one of the things that I will talk about in Singapore is what exactly we mean by something hit your target, what exactly I mean by the uptrend's broken, and how do we find that, what do I mean by breaking news. So we'll talk all about that. So this is a particular exercise that professional traders do every day. And unfortunately, in the financial media, there's a lot of misinformation out there. For instance, when we first went on CNBC, I remember preparing one of our senior traders to go on. And what they do is they hand you the questions beforehand, and you start to prepare answers. And I remember when he first went on that they would continually ask him, is the market going to go higher or lower to finish the day? And I understand that's entertaining, and we came up with a way to sort of answer the question, but I don't really know where the market's going from here. I know that the market is in an uptrend. I know that there's no evidence that I have right now that the market is going to go down. I know that my job as a trader is to trade this market on the long side right now. That's my job. Whether or not I think that Greece is going to blow up and there's going to be an end to the euro, right now I'm one person in the marketplace, and it's my job to preserve capital, being responsible, and that means to listen to what the market is telling me. And there are so many really high risk-reward plays that you can make when you develop a playbook that don't require you to pick the direction of the marketplace. They don't even require you to pick the direction of the stock over 6 months. They're trades. There's technical breakout trades. There's consolidation trades. There's IPO trades. We didn't get a chance to talk about Facebook yet, but there was a really great IPO trade on the long side in Facebook, which we crushed. We crushed it, and Facebook is miserably trading lower. But that first day that Facebook came out was one of our better trading days because there was a setup that we were able to trade on the long side using the IPO price. Simple play, support play. And then when Facebook got below the IPO price, we were able to make a ton of money on the short side. Simple opportunities, good risk-reward opportunities. And so, if you're an investor and if you're a swing trader, I encourage you to see the market like a professional, to do the things that we're doing on a consistent basis to get better. Before Carlton comes in here, I'll talk about that Facebook trade. So one of my guys made this together, this trade on Facebook. So Facebook is probably one of the most highly anticipated IPO since Google, right? I remember when Google came out. I remember actually where I was sitting, what I was doing. I remember trading it. Facebook was hyped to be as memorable as Google. And what happened in that particular play is we knew the IPO price was 38, and it pulled right back into that 38 level, and there was buying on the tape. And we bought in front of that 38 bucks. And that first day, 40 was the level and 42. And when we pulled back into 38, we made a support play. Bought it, kicked it out at 40 and 42. Okay, I think, did you kick it over to Steve now?
Yep, apologies for that. I did that a little bit too soon.
No worries.
Yep, I've put you back as a presenter, so if you would like to share your screen, or should we change it over to Steve?
Yeah, you can change it over to Steve, that's fine.
All right.
There's something was appeared on my screen that said...
And we have Steve online.
Yeah.
So while Steve is doing his presentation, or before he shares his screen, Mike was talking earlier about his training program, which we are calling the Wall Street Trading Foundation program, which starts on the 25th and the 26th of August. If you like to know more details about it, you can go to www.phillipcfd.com/WSW. And those who sign up for the course will be able to join the 24th August Gala event for free. If you would like to just attend the 24th August event, that is also possible, and that will be $20 for Phillip clients and $30 for non-Phillip clients. All details can be found on phillipcfd.com/WSW. Mike, we've got a question from someone who are asking your thoughts on Facebook. Yeah, because he wanted you to continue what you were saying on Facebook just now.
Yeah, so it's been a really great trading stock. I mean, much better. I know some of the investors haven't necessarily, for that long, haven't done as well as they would have liked, but we could literally teach a class of setups just based on this opportunity. And so, there have been so many great technical levels that we've been able to exploit using Facebook. And so for us, that first day we played it as a support play above 38. When it got below 38, we want nothing to do with the longs. We want to be short the stock because there's no support. 38 was huge support. That was the IPO price. And what happens is that a lot of the underwriters will support 38 bucks, particularly at the beginning, because they don't want to be made to look bad. They don't want to have to call up their clients and say, I got you into this IPO at 38 bucks, and oh, and by the way, 2 days later, you're 20% out of the money. That's not a phone call you want to have. And so the guys who took the deal, they supported it on that first day at 38 bucks pretty nicely. But then there was just too much resistance for the stock on day 2, and it cracked through that 38. We weren't actually able to short it for the first couple of days. It's a little bit of a point of contention, actually, with the U.S. markets. There were some Goldman clients that were able to short it. There's some people who think that you shouldn't have been able to short it for the first 3 days because of clearing rules in the U.S., and there are people that think, no, it's okay. Once you actually have some clients who are long the stock, then you can short it. But, I mean, if we take a look at...
Carlton?
So Steve, I think, is getting ready to go.
Regarding shorting Facebook, Phillip CFD clients are able to short Facebook.
Okay, so good advantage. I mean, below 38 is a tremendously easy short. I mean, that's such a huge level. And whenever you're trading an IPO, that IPO price, you're long above the IPO price, you're short below the IPO price, and there's really great opportunities. This PFMT we crushed the other day. It opened up above $9, held 9.45, went straight up to 11. It was the easiest. It was on a slow summer Friday. We crushed it. So there's been tremendous levels. I mean, 28 was a big level to get short below in Facebook. And since it's been below this 38, what we've just done is we've found technical levels that are really important to us, and when they've gotten below the technical levels, we've gotten short. And until somebody wants to show me that there's support in Facebook, I'm going to continue to focus more so on the short side. If a long setup comes, we'll sort of take that, but it's been a great stock. I mean, I remember when the stock got below 31 bucks initially when it first came out. It was a really easy shorting opportunity. It was a big level. Steve actually went on Fox Business and talked about that level. When it got below that, it was a huge hit. You can see on the 19th.
Good morning, everybody. The market is set to open slightly higher this morning. GDP news out of Europe was actually not great, but a little bit better than expected. Across the board, we're seeing markets up globally. And after U.S. markets spent about a week in a very, very tight range, we're set to open a little bit above that range this morning. Right now, we're looking at a 6-month view overall on the SPYs. And we can see that if we do actually have a real break to the upside today, we have some room to the upper part of this channel, probably easily a 1 to 1.5% on the upside. Remember, if we do slip back down inside of last week's range below 140.90, very easily can drop right back down to the bottom of that range. Today we'll talk about, there's actually a few really good in-play names that have fresh news, and then we'll go right to some market stocks, technically that we can look at if this breakout in the market actually holds. And for upside, just remember, if we go back this year's high, we topped at around a little bit over 142. We're at 141.34 right now, so about 70 cents of upside from there. If this is one of those big days, what we would expect is a move up to the 142 area, then some sideways action, maybe a small pullback for a second wave of buying. But so far right now, the market seems to at least want to give people a chance who are waiting for some type of upside break, a chance to get involved. Here's last week's action. You can see we flirted with this 141 a few times, and finally right now we're above it. You can see the pre-market low here is right actually at yesterday's high of 141. And with a strong bid in the market like this, usually stocks tend to trade a little bit cleaner. So why don't we get started on the fresh news. The first thing we want to take a look at is KORS, and here's the longer-term picture on it. They reported very good earnings, positive reaction. We know that if we go back 7 months, we go back a little bit longer. Last time they reported a really good number. It was trading at $34 a share, and it's February 14th. We can see it gapped up to about 39.5, and actually was very strong on that open and drove up to $43 a share. And the next day it fell through to 45. This morning, on these very good numbers, they gapped up to $45, which was the high 2 quarters ago, and is holding above there. If we zoom in on the action, we can see that the initial gap was to $45 a share very early this morning, moved up to about 46.5, and you can see very heavy volume started to come in here right before 8 o'clock. This is unusual. Normally in U.S. markets, volume starts to pick up around 8 a.m. The fact that buying stepped in before 8 a.m. in KORS means that it's going to be very in play today, and already setting up very nicely in terms of technical patterns. Initial buying wave took it to 46.5. We had a second leg up to about 48.5, and then pulled back in here with a very clean pre-market downtrend to $47 a share. The way that I'm looking to trade this when the market opens is, as long as it's above this 46.5 level here, I'll continue to look to trade it long, see if it supports here right at 47. If not, a little bit closer to 46.50, and then look for it to trend back up to 48.5. Normally I don't get that into the specifics of the fundamental numbers, but they're very unusual. They beat revenues by 8%, but what really caught my attention was they beat the earnings per share number by 70, which basically means that for additional dollars coming into the company, 70 cents on the dollar went right to the bottom line, which means that from an expense standpoint, the revenue, they're being run very efficiently right now. And when that percentage of each dollar flowing in goes right to the bottom line, that's extremely bullish and is going to catch a lot of people's attention. So again, if we zoom out, just to give ourselves a picture, it's been as high as 48.5 in the pre-market. If we go all the way back to the uptrend that started in February on that good earnings report, it did get as high as $50.65. So right now it's about 3.5 points away from that. The most recent pivot high going back to May 2nd is 49.5. And certainly if it's strong on the open and holding above $48 a share, 49.5 would be a reasonable target for this one. And if we go to the scanner on this one, it is already traded 56% of its average daily volume, and the market has not even opened, which is why it is the most in-play name and probably will offer the most opportunity today. The second name on my list is one I'm going to go to for less experienced traders right away. Home Depot HD. It's been in a longer-term uptrend. We saw this nice uptrend starting with January. Actually, it was just following the uptrend of the market. The market was weak in May, came off of the market. So we actually compare this to the SPY chart. You can see the SPY uptrend channel versus Home Depot. Been moving higher with the market, but consolidating right by the high here. And the recent high of 54.28 on July 27th is in play today based on the positive reaction to earnings. Like this for younger traders, you can see the average daily volume appears to be over 10 million shares. Actually, I'll give you exactly what that is. It's 11.7 million shares. The conference call is at 9 o'clock, which means at 9:30, your Q&A is probably going to start right when the market opens. So if you're going to be trading this one, you should be listening to the conference call, and you can listen to that by just clicking on this link right here on the scanner right there. Just click on that, and that'll take you into the conference call. And we want to make sure that you're doing that if you are trading it on the open. Zooming in on the last 5 days. So what we can see is the initial reaction here is taking above the resistance from last week, right here at around 53.30 or so. Zoom in a little bit more. Here's today's action, 2-minute chart. And the volume is okay. It's 400,000 shares, which is 3% of its average daily volume. You can see not as relatively in play as cores, but enough for us to have an indication that there's some pretty steady buy interest. You can see as the volume came in here around 8:30, started a pre-market uptrend and moved sideways after it got up to 70 cents and has now moved up another 30 cents. And again, you can see in terms of dollar amounts that it's moving, it's a lot less than KORS. Here's a tick chart so we can see that. And the volume is pretty good here. 10 to 20,000 shares every couple of minutes. But I like, in terms of being able to control your risk, for a less experienced trader on this one, and that's why this is one with people with less than 6 months experience you should be focused on. So here's the one-year chart, so you can see the bigger picture view. Very steady uptrend for about an 8-month period. When the market was extremely weak in May, it did come off a little bit, but not a heck of a lot, only about 12% or so. Then very, very tight coming into this earnings report. So possibly, if we can get above this $54 today, maybe as high as 54.5. And what we can do also is check and see what is our past history on Home Depot in terms of what it does the day it reports. It normally moves about 3%. This is just from another tab in the scanner. And so here's our history. We know a couple of quarters ago, it actually moved 5.3%, 3.4%. So it has a history in that 3 to 5% range, and that would be $1.50 to $2.50 in terms of the range the day after earnings, and that's a lot to work with for a very liquid stock. Let us take a look at our third choice, DKS. Exporting goods has a history of being quite good on earnings reports. This one actually is pretty similar, uptrend channel in the market, and same thing with DKS, although it's a little bit more expanding on the uptrend channel. Negative reaction to earnings so far. It's got some more downside. If it is going to be weak on the open, you can maybe see it coming off another 1.5 to 2 points with this 47 to 46.5 area. Here's the 10-day chart on it. And we can see coming into earnings was looking pretty good. It's being accumulated above $51 a share. Was sold a little bit the last couple of days, but held up pretty well. And now the report comes out, and it's pushing down to the 10-day support area, which was right around this 48.50. Both on the August 1st and 2nd. It did get below there. Let's see where the low was. The low was 48.25 on the 2nd and 48.32 on the 1st. Seems like those levels might come into play right on the open there. Could see some initial buying in this area here, maybe for a pushback up to 49.5. If we're going to trade it on the short side, down in this area here at 48.50 or so, want to see it get below the support here, actually go just 15-day. So again, it's all about the risk to reward, and in this case, we know that it's supported, and we can go all the way back a little bit further in time in this 48.5 area. So it's come off just now from 51 all the way to 40.50. Putting on shorts here, a little bit dangerous from a risk to reward. You're going to need to see it hold below this little area right here, hold below 48.25 in order for it to break down to 47. So wait for a little bit later in the morning. Let's see if it's still down in this area and holding lower. Then you could look for some follow-through in terms of the downtrend. Otherwise, some buyers could step in here right on the open at 48.50 and push it up to 49.5, or even as high as $50 a share. Some buyers were to step in. Volume on this one only has done 150,000 in the pre-market. It's 7% of its average daily volume, which does put it into play a little bit. In terms of what it normally does, you can get this off of the scanner. It normally moves a little bit more, about 6%. 6% on this one is probably about $2.70. It's the last quarter, 5.9% move. Go back a couple of years, it had a 12% move in 2010. So it does actually have a history a bunch of times moving greater than 10%, but certainly something between 5 and 10% today is normally what you'd expect, and that's a pretty good range to work with for a $48 stock. Right on the open, if they pop it up to 49.5, and I see some selling here, this would be an area where I'd look to enter a position on the short side. Let's take a look finally at EL, and this is another stock that can be a very difficult stock to trade, but is in play. For more experienced traders, we can see that positive reaction to earnings right now. This is the last few months. You can see it was having a lot of trouble in this 56 to 57.5 area. Failed there a bunch of times, and actually was trending lower. 57.30 here. We go back to May, consolidated here, and then broke below. We can never get above that 57.30. We're well above that in the pre-market now. If we zoom in to see what it's doing in the pre-market, we can see a little bit spotty on the print, so I'll actually check the volume for you. It's only done 100,000 shares, which is about 4% of its average daily volume. Their conference call starts at 9:30, so expect the Q&A at 10-ish. Does have a history of moving pretty big, 6.5% on this one. here's what it looks like normally on earnings. I guess these are fresh in my mind, the ones from 2011. I mean, 17.9% on one release to the upside and 14%. Actually, you can see, just looking back on this on the last few years, notice that the moves, the larger moves on earnings are usually to the upside. And right now it's gapping up about 6%. And if you go back and look at their average gap to the upside, you have an 18, a 14, a 10, 18.5. So when it gaps to the upside, it normally moves 10+%. So even though it's up about 6% right now, another 4% on that one would be another 2 points or so, which would take it up to around 60.50. Which would be this area right here, maybe even as high as 60.80 or so. And the way that I would look to trade this one is on the open, maybe look for a little bit of profit taking, but as long as it's above 57.5, I'll continue to look to trade on the long side for move up to about $60 to 61 in this range right here. Starts holding below 57.5. Maybe then I look for a pull into 56 or so. And on earnings, could do 5 million shares. Normally does about 2.5. Big ranges, big spread, more difficult stock. But it comes down to my prices in this range right here around 57.5. I'm certainly going to take a look at it. And if it moves right up to 60 on the open and has trouble there, and there's a lot of selling at 60, I'll look for some type of pullback from that level, at least a point to a point and a half. Those are the fresh new stocks that I wanted to talk about. I'm just going to talk about one second-day play, TSO. One of the stronger stocks in the market. We know they bought a BP unit yesterday in the market, like that acquisition. So a lot of synergies there and behaved very strongly for the most part most of the day. Trended up, had an opening drive, and then the second wave up to $39 a share. Did attempt to reverse around 1:30 in the afternoon, but could not hold below 30.50. That'll be a level to watch again today. Right now it's gapping above yesterday's high of 39.20. So it looks to possibly be some follow through on this one. The natural level for it to move to would be $40 a share. If it fails to hold above yesterday's high and comes down and starts holding below 39, you can definitely see some profit taking on this one. Let's take a look at some names that are set up technically and also market stocks based on the possible strong breakout on the SPY today, which is right at its pre-market high. First one is Qualcomm. Here's the 6-month chart on this, and it should move with the market today. If the market maintains this break, it should stay above $62 a share. Next resistance on this one is around 63, and then above there, probably around 63.5 or so. Let's take a look at JP Morgan. JP Morgan setting up okay. Let's say 37.5. Use as a trigger on this one. It's been as high as 37.85 in the last couple of weeks. But I like, it's about 37.5. That's pretty good for that one. GMCR, after the big move on earnings, has been consolidating against the 25. Rejected it here back on August 8th. Yesterday got above there again, but closed at 24.5. Maybe the third time is the charm on this one. So I have where it's at 25 and 25.30. Pretty big levels there. Let's take a look at Baidu. Baidu is set up very nicely technically. Here's a longer-term chart. Keeps on failing at this 132 area. Above 132, next resistance is around 135 or so. CTSH. This is the one that actually gapped into the middle of this this gap fill area here on earnings on a really good number. It's been about a week moving sideways. This one seemed like it was ready to make another move as well. Have alerts set for 65 and 65.5. It gets above those areas. The full gap fill is all the way up to almost $70 a share. That's a total order for that one. And then finally, GS. Goldman was set up pretty nicely as well. Fairly similar to Baidu in terms of the size, type, horizontal action, similar to the market as well. 102.50 was the bottom of the range, 104 was the top of the range. It's gapping above there right now. The gap fill on this one is to 106 and a quarter. Fill this little gap area here back from May 11th. This is probably when the jobs number came out back there in May. So there you go. There's some stocks that are set up technically. If you go to the morning idea sheet, there's some other ones as well. And this is our number one idea, number one in play stock in the pre-market, and will be my focus. Perhaps some guys on the desk are already long this right now against this 47 area. It's already started to resume a pre-market uptrend. And upside areas for possible resistance are 48 and 48.5, and by 10:30, if it's still hanging out up here in this area, could go as high as $50 a share. Be patient on the open. Don't dig yourself in a hole, and good luck.
Thanks, Steve. And now we're waiting for Mike to come back. Mike, are you there?
I am here.
Welcome
Can you
back.
see my screen again?
Yes, we can.
Okay, great. So that was, thanks Steve for doing that. That's what we do every day to prepare for the Open. Steve does a really good job of that.
There was a
I want
question.
to go back to, sure Melissa.
Yeah, there was a question on the S&P because one audience member noticed that your team uses the S&P a lot. So they're asking what about other indices? Do you use other indices for pre-market trends?
So it depends on what stock we're trading. So for instance, during the financial crash, we certainly would use the banking index. If we're going to trade Home Depot today, we'll certainly look at our housing index. If we're looking at a NASDAQ stock, we won't look at SPY. We'll look at QQQ. One of the things that some equity traders do as well is they look at the futures. So they may look at the S&P futures as opposed to SPY. If you're trading an oil stock, you certainly want to look at the price of the barrel. If you're looking at gold, particularly a gold miner perhaps, you certainly want to look at the gold futures. And so the answer to that question is no, that's not the only thing that we look at. But again, understand what Steve is doing. He's trying to give our traders a sense of the big picture for the day. And if we're actually breaking above important resistance levels on SPY, then that's going to mean that some of our market stocks are going to go up. And so we have to go over that. And if we're actually breaking pretty strongly to the downside, that's going to infect how our stocks trade. So we always start there. And I think that we found over the years that some of the things that are different between us and perhaps the new and developing trader is that they don't account for the big picture. They're just trading their stock in a vacuum, and sometimes they're confused as to why it goes up and down. And you want to think about that when you're trading it.
Okay, thank you, Mike, for that. I hope that answers the question. Once again, if you have any other questions, please feel free to type your questions in.
All right, so let's get back to Melissa. Is there another question you wanted to help me with, or?
I think we've answered most of the questions. There are some people who are just asking, for example, someone was asking whether did you short Yahoo when the CEO surprised the news with the Alibaba cash.
Yeah, so Yahoo's not the greatest trading stock intraday. You would actually have to present a really important event for me to trade Yahoo on an intraday level because it doesn't really move that much. So the things that Steve brought up was our scanner. And if you go and take a look at Yahoo, one of the things that I don't like about that particular stock is it's too thick. The volume is too much. It doesn't really move enough intraday. And you can see I'm actually typing up a 3-month chart. It's just not moving. I can type up something like KCG and look how much it's actually moved when I was actually trading it. It moved 70% and then 15%, and I'm sorry, 70% and then 30%. Let's take a look at a VVUS, which moved from $30 all the way down to $20, back up to $23. Let's take a look at an EDU, which moved from $24 all the way down to $10, back up to $14. Let's take a look at Facebook, which is traded from $38 to $20. These are some of the stocks that we've been trading. I mean, we'll also take a look at something like an Apple, which has moved a tremendous amount, or Amazon, which are really good high beta stocks, or Netflix, another really good high beta stock. So those are the things. We're trying to be efficient with our capital, and to me, Yahoo is probably more of an investment that you might want to make. I would just caution one thing, which is one of the things that I think you got to do is you want to have a strategy for how you're going about your investing, your trading, and you want to sort of understand who you are. And so, look, if you're really interested in the tech sector and you think you have a pretty good handle on whether or not Yahoo is going to come back or not with the new CEO, who was, I know my wife's really excited about the fact that Yahoo has a new CEO and that she's been talking about that for weeks. That doesn't necessarily mean we ought to buy it, but it's been very interesting for a lot of different reasons.
Are there any other questions?
What I want to do, yeah.
No, I'm just asking the audience whether they have any other questions, because it looks like there are no other questions, so we'll probably leave you to continue your...
Okay, great. Good, because we got to go trade. So I'm going to go use some of those ideas that Steve actually, particularly cores. I know you guys don't trade cores, but that ought to be a good one. Look, if anyone has any questions, my email address is mbellafuri@smbcap.com. We're obviously going to be in Singapore for a couple of weeks. Feel free to send me an email if you have any trading questions. Whether or not you're on our desk or not, we will respond. And we do actually a nice job of helping new and developing traders on our blog, smbtraining.com/blog, where every day we're putting out what we're doing, what trades we've made, and how we're looking at the markets. And you certainly ought to follow perhaps us on Twitter at SMB Capital or myself at Mike Bellafiore. So we'll see you in Singapore in a week, hopefully. And we appreciate you chiming in here and watching us for a couple hours, and we'll talk to you soon.
Yeah, just to recap, Mike will be in Singapore on the 24th for the Wall Street weekend, and there will be a weekend training course on the 25th and 26th of August. And you can get the full training course, which will cover all the trade psychology, how you build your playbook, etc. That's a 6-session course, which starts on the 25th. And if you purchase either the weekend or the full course, you will have a free ticket to the gala event on the 24th of August. Mike will also be one of the speakers at the Shares Investment Conference, which is part of the Phillip iFest on the 1st of September, which also features Jim Rogers. All details can be found on our website, phillipcfd.com or phillipcfd.com/WSW. Another website that you can go to for more information is poems.com.sg/ifest. I repeat, poems.com.sg/ifest. So we'd like to thank Mike and Steve for their time, and we're looking forward to seeing you in Singapore.
Okay, we'll see you soon, Melissa.
All right, thank you, and good night, everybody.